Our next panel features 3 bank CEOs who run banks of different sizes with different business models and operate in different parts of the country. Pat Weigel is chairwoman and CEO of Norway Savings Bank in Norway, Maine. Kenneth Kelly is the chairman and CEO of First Independence Bank in Detroit, Michigan. And Scott Anderson is president and CEO of Zions Bank in Salt Lake City, Utah. They also happen to be dedicated members of ABA's board of directors, as is our moderator, ABA chairman Jim Edwards, who runs United Bank in Griffin, Georgia. Jim, the virtual floor is yours.
Here with us on the panel. It's really good to see everybody. We've got a great group of speakers that are going to be with us today, and I know how much bankers across the country always appreciate the opportunity to hear from other bankers. Let's get right to it, because we just got a little bit of time today. Begin with talking about the challenges that you and your banks had to overcome the past. So first, Pat, let me go to you. About a year ago, we were all trips to the global pandemic. What's the last year been like for your bank?
Well, thanks, Jim. I think I can sum up in 4 short words: the brilliance of resilience. We've all had to really adapt and be flexible, certainly over the last 12 months. So here at Norway Savings Bank, we have 300 employees and 24 locations, and I would say it has certainly been all hands on deck, particularly in the early months of the pandemic. First and foremost, of course, as is the case with all of you, it was about keeping our employees safe and healthy. When I think about it, it was exactly a year ago that we only had 1 employee who was working out of their house set up with remote technology. Just a few short weeks later, we had about half of our workforce operating off-site. So just a monumental task, especially for an industry like ours, so heavily regulated, where IT safety and security standards are so high. So I think when you go through something like this pandemic, clearly an organization gets tested. We ask ourselves, were we properly prepared? Had we made the right investments along the way? Did we have the right team in place? And I really think we can answer those questions with a resounding yes. We made the decision early on to build an automated platform in partnership with a fintech to handle our expected PPP volume. Really glad that we did that. Our mobile technology and digital channels have experienced tremendous growth during the last 12 months. And so when we made the decision to close the lobbies in our branches, our customers didn't experience any interruption in their banking services. So we've made the decision to waive fees, to get into loan modifications with lots of different customers. Nobody said we had to do it. We just did it because it was the right thing to do. Right now, of course, as all of you are, we're processing stimulus payments, 3rd round. And, as is the case, I'm sure, with your banks, a lot of them arrive into the bank with wrong account numbers, causing a lot of stimulus checks to be rejected in the system. And it takes a lot of manual effort to get them to the right place. And our employees are doing that. So I would say there's been a tremendous amount of resilience, certainly a lot of hours spent, a lot of sacrifice within families, but we are absolutely a stronger bank as a result.
Yeah, that sounds like a great response, Pat, and I appreciate you sharing all of that with us. Kenneth, let me turn to you. As a leader of one of the larger minority depository institutions in the country, I'm curious, up in Detroit, I'm curious what sort of challenges your team faced.
Well, Jim, thanks so much for having us. And I want to say to you and Rob, thanks for a great summit that you're putting on. But as many of you know, we faced 2 challenges there in Detroit. One was a life issue, and then one was a livelihood. The life issue is, Detroit was ground zero as it related to the initial stages of coronavirus. We lost individuals that we know personally, kind of in that process, not inside of our bank, but in the community. And then secondly was the anxiety that came with the livelihood when we went to the shutdown. And so that permeated our bank. We had to really try to instill, the confidence of our team members, taking on the safety precautions that many of us had to take on to move forward. But the reality is, I will tell you, we were resilient, just as mentioned by Pat. When you think about, we had just brought on 2 new leaders, and 2 months in, we saw the turmoil associated with this event, and we had to respond accordingly. Last year, this time, we were thinking about would there be a PPP. The Treasury and SBA did as best as they could in standing that up. Our team was working through the weekends to try to get those dollars out. But unfortunately, we had, the disproportionality that Joyce Beatty talked about earlier that we really still have to deal with. And the reality is, I want to give a couple of thanks to a couple of our community banks who were willing to reach out and help us, because we didn't have the total infrastructure to be able to move massive PPP loans. And that was TCF Bank, Donnell White, who was there. Sandy Pierce called us from Huntington Bank. And then at that point in time, Bynum Elliott from Fifth Third. So it shows a community that can come together and really focus on a big issue and make a difference. But at the end, I got to tell you, I want to say thank you to our team at First Independence Bank, because we had to go through the same resiliency, as Pat mentioned, of dealing with deferments and understanding the shrinkage of our net income margins and understanding how we were going to get through the year. And we were able to come out very successfully at the end of 2020. So that's what was going on in Detroit, Michigan.
Yeah, that's great. Well, thanks, Kenneth. And it's great to hear about banks coming to help each other like that. And that's fantastic. So thank you for those comments. Hey, Scott, I know, Zions is a large bank with operations in multiple states. I'm curious what stands out to you from this past year.
Well, Jim, what stands out for me are 2 things. First, our bankers. We celebrate the wonderful work that our healthcare workers have done to keep us healthy during the pandemic. But I think of our bankers as real, true life heroes that have put themselves at risk to help save jobs and small businesses and our economy. And second, I've been impressed by the rapid cultural and operational shift from working in traditional office settings and conducting in-person banking with our clients to working remotely with our clients taking advantage of digital banking services. And while we had much of this technology available to accommodate these changes for several years, scaling up very rapidly, almost overnight, to facilitate work from home scenarios and virtually servicing our clients were significant challenges. And I think this was especially true as you look at what we had to do to bring up the payroll protection program last spring in round 1, when we had only a couple of weeks' notice from the SBA and the government that the program was coming. We were building out the operational systems while we're flying the airplane. And think what was happening at this time when the program was announced. Businesses were in panic. They were seeking government help. They were coming and knocking on the doors of the bank to get a loan. At the same time, the economy had shut down. Our branches, lobbies were closed, and we were operating out of drive-up lanes. And our bankers and operational staff support and technology teams were all working remotely. Yet in that environment, we as bankers pivoted. The industry pivoted. And we did it quickly, and the results speak for themselves. I have never been prouder of our bankers or of our industry than I have during the last 12 months.
Yeah, Scott, I could not agree more. And when I think about the past year here, what stands out is our people. Certainly at our bank, but across the country, to the thousands of bankers who really just stepped up and delivered for our customers. And I thought it was very telling. You heard Senator Manchin say that bankers just figured things out and got it done and delivered for our customers. And I think it's phenomenal that the response that our entire industry has done here. And I think we need to be proud of that, and we need to be grateful. And I've seen a lot of leadership in our bank up and down the line from people who are just willing to stand up and do what needed to be done to get through this. So it's exciting, but thank you for all those comments. I mentioned PPP there. Why don't we turn to that quickly? We touched on it just briefly here, but I know that all of your banks, just like ours, have been active participants in the program. Scott, let me stay with you. When history is written, how do you think it will reflect back on, and what will it say about PPP?
Well, I think the history of PPP will record that banks were on the front lines of the battle to save jobs and small businesses and to help the economy recover. As we saw in the short video before our panel, banks did 89% of all PPP loans in the first round, and this supported 48 million jobs. Think of that. And our rate in preventing fraud was the best of any group. And in this latest round of PPP relief in 2021, our industry has done approximately 80% of the loans so far. And so history will say banks were on the front line, banks did the work, banks got the money to the small businesses that needed it the most, and they were there helping. And I think that what this demonstrates is the value of a decentralized banking system where citizens in local neighborhoods and communities trust their banks and are able to seamlessly access the credit and these type of programs that they need to survive.
Scott, I couldn't agree more. You know, it has absolutely been a giant undertaking by the SBA over 2 administrations to run this program.
I think we've lost Jim. Is that happening on your end?
It did.
So, Pat, would you mind jumping in and sharing your side of the PPP?
For all of us to feel proud, but I think what stands out for me is just the enormous pride that our team has for their role in the PPP and the tremendous gratitude that PPP customers feel towards the bank. You can't help but get emotional when you realize what it has all meant. In our case, it's the over 14,000 jobs here in Maine that have been protected as a result of what our team did. About 85% of our PPP loans were less than 150,000. We did a handful that were even under $1,000. Every single one of those truly made a difference in someone's life. So just really special. I think all of us can feel super proud of that.
Yeah, and I'll come over the top with that by saying, you know, I was really proud of working with my fellow bankers in Michigan, the Michigan Bankers Association. We were meeting basically every day talking about these issues, really holding hands and locking arms in arms to deal with these issues because they were unprecedented. And so from that perspective, that was something that was really, you know, I would tell you, kind of hold hands and work together as we were working through this. Jim, are you back?
Yeah, I'm back. I apologize. My technology went down there just for a minute, I think. So, well, let's move on and let's talk a little bit about the economy. There's a lot of optimism right now about where the economy is and where it's heading, hopefully. We're seeing positive signs of life in many areas here of the economy and in many parts of the country. And this is really before Congress steps up and delivers on this new massive stimulus bill. I am curious about what's happening in your communities and how optimistic you each are about the future. Pat, let me start with you. How's business up in Maine?
The answer is that there's tremendous hope, but still a degree of uncertainty, I would say. I think all of us understand that there have been certainly really significant differences across industries in terms of who's been hurt by the pandemic. Here in Maine, we rely on tourism a lot. It contributes significantly to the state's economy. But here we are on March 16th. Our border with Canada remains closed. We get a lot of visitors from Canada in the summertime. It remains to be seen, I think, when our ports will be able to host cruise ships again, whether tourists will return to Maine pre-pandemic levels. So we all know that hospitality has been hit really hard. But I do think that we're hopeful this summer, 2021, Our bank in particular does a lot with the Boys and Girls Summer Camp business, for example. As probably everybody knows, those overnight camps didn't operate in many circumstances last summer. This summer, those same camp owners have put in protocols and I think are moving forward with plans to reopen. So certainly I think that PPP and other programs, government programs, can't be the only solution, even though they have, of course, been tremendously helpful in keeping these businesses afloat. But I think that, as many in today's program have said, we have to keep our eye on getting people vaccinated. And certainly President Biden's stimulus package is going to help with that. There does seem in Maine, I would say, the momentum is definitely building for people feeling better about getting that vaccine. So that's really great to see. So we've got to get everybody back who have removed themselves from the workforce. That will be really important for those employees to come back and feel comfortable in their roles. So again, a lot of optimism. We're not there yet, but we have a lot of hope for the second half of 2021.
That's really encouraging, Pat. Scott, how about out in your markets?
Well, as Pat said, I see optimism building for the future. And I believe that our market will continue to improve as vaccinations roll out and as we anticipate a new wave of entrepreneurship to drive renewed demand for capital. Utah has recovered remarkably well economically from the pandemic. Certainly the entertainment and hospitality industries have suffered greatly and will require more time to recover. But in Utah, we're at full employment. We have one of the lowest unemployment rates in the country, and at the same time, one of the highest job creation rates in the country. And we're only one of a few states who have recovered all of the jobs that we've lost during this pandemic while adding jobs year over year. Our state revenues are at an all-time high. We produced a surplus in tax revenues in 2020. Housing and construction are booming. And as a state, we've made major investments in transportation, infrastructure, teacher salaries, education, healthcare, and other key areas. We enjoy a highly diversified economy. And so I am optimistic that as the year goes on, we will see continued growth. I think it's interesting that in a recent poll we completed about a couple weeks ago, 72% of those surveyed thought there would be another national pandemic-related recession in 2021. However, at the same time, that same number believed that it would not have a major impact on them. And so people are starting to feel optimism for the future.
Yeah, that's encouraging. Kenneth, how about in your area?
Sure. Real quickly, I will tell you, just to sum it up, we have a bright outlook. We are hopeful that the fundamentals will stay sound. I'm actually going to be getting on a call here just shortly called Detroit Means Business that is being led by the mayor of the city there in Detroit and also one of the leaders of the utility business, Dave Meter of BTE. And what we are seeing is there are 60,000 plus businesses in that area that we're looking at trying to figure out how do we create infrastructure and systems for them to be successful. But this is very akin to what Detroit's used to, what Michigan is used to. And so we're all just locking in arms and figuring out ways how to help that 60,000 business, the other 12,000 that has between 2 and 49 employees, to be sure that there's this sense of safety net and community around business being mobilized moving forward.
Sure. Kenneth, let me stay with you for this next question. We heard earlier from let's start off with this next question. We heard earlier from Congresswoman Joyce Beatty, who made it pretty clear that she and her colleagues in Congress want to see our industry move further when it comes to diversity. As Rob and James noted earlier, this is a big focus for ABA. It's something we talk about regularly in our meetings. What are your thoughts on Congresswoman Beatty's comments and what our industry can and should be doing?
Well, we live in a capitalistic society. Nothing happens without money in our society. And so we should be on the forefront, as Scott talked about earlier, on this issue too. We shouldn't wait for people to drag us into this. I will tell you, my role here in being a board of director, ensuring that we have inclusion across some of our committees. The agreement that we signed between the NBA and the ABA last year, I think, is one of those that's putting us on the leadership issue in terms of moving the ball forward. But the reality is, when we go to the communities and go back to what Representative Beatty stated, the data shows the disparities that anyone with a fundamental education and appreciation for statistics could appreciate that there are some disparities. And so I think it's incumbent upon us to live this as a part of our value system, not as part of we're going to check the box. And as she talked about bringing in some of those CEOs of the larger GSIBs, that level of accountability has to start at the top, and we have to bring it down. And so I would say to all of my fellow ABA members that are listening to this call, we have to live this as part of our value systems. We're Americans first, and we should live that way daily. And the capitalistic society aspect of it, meaning the money, it'll take care of itself, and we'll be able to take care of all of our citizens.
Sure. Scott, let me turn to you. I know that Zions has prioritized diversity. Give us your thoughts as well, please.
Well, I would start by saying I remember last July where Rob Nichols made a comment that we needed to address racial inequalities. And he said that he hoped that bankers would respond with equal passion and determination to address longstanding racial inequalities as we did in our response for the PPP program. And I agree with Rob that banks are in a unique position to address and advance two key principles that everyone should agree on. First, that all should have a truly equal opportunity to prosper in our country. And two, that economic inclusion is essential to creating these opportunities. And like Ken said, banks are in a unique position to do this. So I think we really need to step up our efforts. I was inspired last June where one of our fellow bankers, Angela Underwood Jacobs, who works as a senior vice president at California Bank and Trust, a Zions affiliate. She was the first African-American woman elected to the city council of Lancaster, California. And her brother, David Underwood, was a federal protective service officer who was shot and killed by rioters while he was guarding a federal building in Oakland, California on May 29th. And in her testimony, she said that the four things that are needed to replace racial tension and improve the lives of citizens of color are education, jobs, housing, and listening. And we took that, and that inspired us. And we decided that as a bank, as employees, that we would involve our community in coming up with a compact on racial equality, diversity, and inclusion. And our governor adopted it for the state, and he encouraged other groups to sign on so that this movement would not only be a passing movement, but it would be, in fact, it would transform our economy and society. And that this movement says that we will condemn all forms of prejudice, bigotry, and discrimination, but that we will use our balance sheet to help those in need to get access to capital, to the unbanked, the underbanked, and to small businesses, especially women-owned, minority-owned, and veteran-owned businesses.
Thank you. Thank you. We're getting tight on time, so I'm going to jump to our next question here. There's been a lot of attention paid recently to fintech players trying to offer banking services, but without having to meet the same rules that we as bankers do. Kenneth, how do you see the competitive challenge posed by non-banks, and why is this a policy issue that Washington needs to focus on?
Well, it's one for the simple reason that, as you said, you got to play by the same rules. I mean, that's what's great about a capitalistic society. We learn the rules, we set the rules, and we play by them. It matriculates through everything from the politics to the economy to the culture itself. And so we're very open to that. But the reality is that's not the case right now. What I would say, and what we've talked about even at my board, I've said to our board for a couple of years now, we have to behave like a technology company in the logistics of moving money, whether that's a loan, taking in savings, or deposits. We have to be able to do that. And so the reality is, when we think about where we are today, that is a culture change. It's a technology change that all of us got to figure out how do we embrace. I think trying to pump the brakes and repel against where the market is going is probably not a good answer. So we have to take on the leadership and move forward. I'm happy to say, and this is not to brag, but we will be fully digital next month. We're going through a core transformation, going to Finastra. Moving forward, we've got some other partnerships I don't want to talk about that some are in the news, but the reality is if we're going to be able to serve the LMI community better, we're going to have to be able to do that synthetically versus building branches.
Great, thanks. Well, we're just about out of time here, but I'm going to move to what I call the lightning round here and give you just a very short period of, we've got maybe 30 seconds to maybe a minute for each of you, because I want to hear one thing that your bank is doing differently today because of COVID that you think will continue after the pandemic ends. And Pat, let me start off with you.
Sure. For us, it really has to be about the remote worker. As I said at the beginning of my comments, we only had one a year ago, and now we have, say, 150 people working off-site. And through surveys, we know that a lot of those workers want to stay working at home. They enjoy the flexibility, and frankly, in many cases, they've been more productive. So we want to accommodate that. And I guess I would just end it by saying good talent can be difficult to find. It's invaluable. So for our organization, being flexible and accommodating employees will definitely be part of our solution in the future.
Great. Scott, how about you?
Well, what we've learned and what I hope that comes out of this is that while banking is still a people's business built on trust and strong local relationships, at the same time, it's increasingly evident that it's a technology business and a data business. And what the pandemic showed us is that we need to bring technology in to support our bankers. And getting that tech and touch component right will deliver this distinctive experiences and the ease of doing business that clients are expecting and want from their banks.
Yep. Agreed. Kenneth?
I would say lightheartedly dealing with Zoom anxiety, but I would say more purposefully, we have to build better partnerships. What we talked about, what you said, heard Representative Beatty talk about, we've got to build these partnerships so that we can really enhance the economy like Scott talked about, and doing it in ways that create pacts and create stronger communities across these racial and ethnic lines going forward.
Absolutely. Well, hey, thanks to each one of you for the time today. And I know all of our participants have enjoyed your comments. I know all these three folks well, and it's really great to hear their comments. I wish we had more time to go even deeper, because I always learn something when I talk with each of these three individuals. But thanks again for taking time to be with us. Rob, I'll turn it back over to you now.
Thank you, Jim.
Thank you, Jim and Scott, Kenneth, and Pat. Excellent insights as always. We appreciate you sharing time with our audience today and your service on the ABA board. Folks, that wraps up our day one program for our Washington Summit. Thanks to all of our speakers for taking time out of their busy schedules to join us. Please visit ABA.com to view all of the resources discussed today. I want to especially invite first-time Summit participants to check out what we have to offer. ABA.com should be your one-stop shop to learn more about banking issues, training and education opportunities, and a wealth of other resources to make you a better banker. Any employee at any ABA member bank can access all of the information at ABA.com. All you need to do is register. And I want especially to thank all of you for joining us. By participating in the summit, you are taking an important step to better understand the issues and people who will shape banking policy in the year ahead. To that end, I encourage you to join us again tomorrow, when we'll hear from both the chairman and the ranking member of the Senate Banking Committee, Sherrod Brown and Pat Toomey. We'll also get the view from the Biden administration, from Cedric Richmond, director of the White House Office of Public Engagement, and a regulatory perspective from FDIC Chair Yelena McWilliams. Have a great afternoon, and we'll see you back here tomorrow at 1 p.m. Eastern Time.